Our conditions, majority bullish right here. S&P futures up nicely this morning, around 1%. We're seeing that push higher, pushing things to 12 and 2. As this has been ticking back, remember when we get compression right here, this can move pretty aggressively all to one side or all to one other side. So this has been ticking between 12 and 10. Yesterday, the SP closed out at 8, majority bearish at 8 and 6. So you can see what that day today is doing. It's pushing it pretty nicely with a good confirmation bar, finding some support right here. That being said, we're still sitting right at this resistance area. We're going to run into some resistance here. If we can see bulls hold the ground right here, allow this to kind of flatten out and stabilize, we could really start to see a trend shift here for more potential upside. And but we could see some backing and filling right here around this 5,500 range. Be aware of that 5,500 range as well. This could be a significant support range. If we could get back here and bulls can control that, then we could see some continuation. We've got significant resistance overhead, again, right where we're at right here, and we'll see if any kind of news catalyst or anything is going to be positive. That's one of the risks that we're dealing with now is some of the news items dealing with inflation, dealing with, even the Fed's discussion yesterday, no changes on interest rates, but dealing with potential for a higher or maintained higher inflation, as well as recession. So that's referred to as stagflation, where you have inflation prices moving higher, but you have interest rates remaining higher as well. And so you've got a scenario where the economy is slowing, and there's no way to fix that with the Fed being able to lower interest rates because inflation is still high. So that's the battle that's happening as well between Trump and the Fed right now. Is I think Trump knows that we need interest rates to be moving lower, but the Fed can't do it based on everything they talked about yesterday. It'll be interesting here over the next few days to see if we can hold up into these levels. Let's look at the breadth here. We're seeing it at 54, so continuing to move bullishly on breadth. The number of stocks above the 50-day moving average in the S&P 500. So that's at 54%. So still, we're better than half now instead of being way down in these deep levels to the downside. So gaining a little bit of momentum here, but we're still at that equilibrium location. We're seeing the VIX pull back a little bit this morning down to that 22 range, and we can see it, drop back down or even hold these levels. A sell-off in the markets is going to spike the VIX. It's relatively short-term indicator here as well, but just looking for the overall conditions of volatility, we're still retracing a lot of that nastiness that we had last month. SHY, let's take a look at what we've got happening here on the short end of the yield curve. Still seeing some strength, some bullishness in short-term bonds, and that's what we want to see. We want to see short-term bonds moving higher. That means that the yield on those short-term bonds is moving lower. This weekly time frame you can see is a nice perspective of where we've been. Daily time frame, getting a little bit of volatility here as well. TLT long into that yield curve, still in a downtrend, a significant downtrend as well. We want to see that hold where it's at or actually start to move higher. Bond prices moving higher, that means that this 10-year yield is going to be moving lower. It's working on it, but you can see it doesn't want to drop very quickly. There's actually some bullish tone here that's keeping that 10-year up in this 430 range. Part of the issue, again, of the bond market believes that it needs to be right where it is. That's where real-time market discovery and price activity is important, and bonds are continuing to hold up. Let's move along here. Dow Jones Industrial Average sitting right at that, inside of that 50618 retracement location, potentially finding some support here at that 408. It could move all the way up to that 418 level. That's on the diamonds, DIA. Let's look at triple Qs here. Triple Qs, we've got up into that 618 as well. Majority bullish, compression. It's this compression at the location that's the most concerning part. Again, so be aware that when we get these rallies, when we go from expansion to compression, now that's forecasting additional expansion. Are we going to expand this direction, or are we going to compress and continue the overall trend down? Is this the downtrend, counter trend, 618 rejection, and more downside to come? Again, that's where we're at right now, and that's how we have to manage the risk to say, there's still some, we're at the upper end of this trend here as well. Real long-term trend compressing back down. I've mentioned this price pattern before as well when we're looking at here and where we were at a couple years ago. Is that really where we're at ultimately in this process? Is a counter trend back up? Okay, counter trend back up, some resistance where we were, some resistance where we were, more downside, more downside. Okay, that is a scenario that we need to be aware of in terms of risk management across the board on the Qs, the Dow, the S&P 500 as well. Let's look at the Russell. Russell has been the weakest of the group, and but it's finding its way higher. It's chopped above the 236 here, holding support above 382. Finding some rejection at the 50% retracement, and now it's got some demand all the way underneath these levels. But again, it's the weakest of the group because it's the highest risk stocks. It's those small cap names that nobody wants if interest rates going to remain high and the economy is going to tank. Then those stocks are going to get hit the worst. USO, let's look here. Prices on crude oil still in that bearish momentum zone. Let me make sure I've got the right connection here. I do. So we are expanded. Okay, our trend's expanded to the downside. We're in bearish momentum. We've moved back to the 236. We're underneath that 236 in a downtrend. So this becomes our bearish trend location. Just like a bullish trend, when we're grabbing onto that 236 and that upper momentum range becomes that playground for crude oil, in this case, that downtrend. But we're sitting right at a larger term. We want to look at the longer term perspective as well. And we're back down to a potential demand location where we could get a bounce. So keep an eye on oil. It could be exciting activity here over the next few days. Gold also, everybody's running and jumping into gold. It's an obvious price activity, but we're very, very, very extended. We bounced off the 236, continuing to move. That still continues to be that trade. As long as that moves higher, if you find support, it's bouncing, it's continuing to move higher. That still becomes a viable trade. But just be cautious that we're pretty extended. Could use a decent pullback here in gold. SLV still holding that pretty tight compression in this price activity here. Not much happening there. The dollar, a little bit of a blip here on the dollar. Okay, we're seeing some potential strength. It could be counter trend, just like that oil chart where we're in this downtrend, counter trending, still have momentum to the downside on the dollar. Let's look at a couple stock ideas. There are a few breakout trade patterns that are looking nice. HALO. Confirmation bar. Sometimes these are a little bit harder to trade when they have that much confirmation because you get selling back into those pullbacks. So you could wait for the market open, see what kind of scenario you're getting to establish your risk profile for a trade. A couple of others, EOSE, also nice looking pattern, big volume, back into momentum. Let me grab this low point here, and not a whole lot of stocks in that list, but there are a few that are starting to come back online. We're starting to see trend shift, starting to see some trades coming back into a little bit more aggressive names, electrical products. Biotech is still being working as well. And we'll see what today brings. That'll do it for today's update. Everyone have a fantastic day today.